Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for an impulse to the upside followed by a three-wave corrective structure and then continuation to the upside. The invalidation for this scenario is taking out the low, and at the moment in this particular scenario we would then be looking for a couple of 4-5s towards the upside. Now, if we look at the volume, then the recent push towards the upside has the highest amount of volume, and in an impulse to the upside, preferably the highest amount of volume sits in a wave 3. If we want to count this structure as a wave 3, then we can count a double 1-2 here, and then locally another 1-2 to label this one candle here as a wave 3, looking for this white 4 to end and then move up to finish white 5, then blue 3, 4, 5 to finish green 3, and another 4, 5. Now, mind you, to the upside, we do have some interesting resistance. First of all here, daily naked point of control, 104.2k, weekly naked point of control 105.2k, and then of course still at 107 we have some resistance there. But also, if I put some more lines on my chart and now it starts to get messy, then what you can see is we also have a daily at 106. Now these gap levels, let's say, are levels that I put on my chart this morning. They are not necessarily significant, I just wanted to have them on my chart, so I just show them in the video here. For me, the most significant level to the upside is undoubtedly the weekly naked point of control. Now, after this impulse to the upside, which we then count as a wave 1, we want a three-wave corrective structure to the downside in a wave 2. And what is interesting here is that the golden pocket here, taken from the low to the potential high, maybe at the weekly naked point of control, would be in confluence with the weekly naked point of control that we have down here at 96.8k. So that is definitely something that I will keep in mind if we get that retracement towards the downside. More locally, the invalidation for your white wave 4 and then a 1, 2, 3, 4, 5 is the 0.618 here, taken from the low of 2 to the high of your 3 at 100.1k. If we then go to the bearish scenario, then in the bearish scenario, we are also looking for a retracement. That is at the moment the highest probability still, right? That we are still looking for a retracement to come, both in the bullish as well as the bearish scenario. However, in the bearish scenario, there is one important difference, and that is that in a wave C, the last structure being wave 5 in C, can end on a high amount of volume. So that is why there are two polylines here on my chart representing the potential price action. This is literally the same structure as I have just shown in the bullish scenario. So a couple of 4-5s to the upside, find resistance, then get a retracement. And the other one, as you can see, is actually more bearish, and then we would count it as a 1, 2, 3, 4, and this push to the upside is then labeled as your wave 5, counted as a 1, 2, 3, 4, 5 wave structure. Would be nice to still take the high. We'll jump into the 5 minutes in a second, but in this case you could end a wave C at the next high, and then look for a retracement with then your wave 5 having the highest amount of volume. Again, you know, in an impulse, wave 3 most commonly has the highest amount of volume, but a wave C does at times have a tendency to end on a high amount of volume. This candle over here, by the way, was a wave C as well, in an A, B, and a very extended C, ending on a very high amount of volume. So it does happen, and therefore we have to be aware, because it is important with regards to risk management, of course. Now then we look for a retracement after wave C. We look for a retracement to the downside, and then of course as the retracement happens we will get a better idea of what type of structure we are looking for. If we then go to the 5-minute time frame and have a look at this range here, then from an Elliott wave point of view, it would actually be nicer to still take out this high one more time at least, right? So even if you want to have a wave C that finishes very soon, would be nicest to still take out this high. And this is the 5-minute chart, so take it with a little bit of a grain of salt, I suppose, right? The lower the time frames, the quicker things change as well. But from the high here, we can count a nice zigzag structure to the downside, a zigzag structure to the upside, and a flat structure here to the downside, creating a sideways double combo, a WXY. So zigzag, zigzag, and then a flat here. We also took the high, wicked above, and then you can count a five-wave structure here to the downside. So that's actually pretty nice. But if you do count a WXY here, right, to finish a wave A, and at the moment this happened, you can label this either a 4 or of course a wave A. But then your move to the upside is important. If this was a 5-wave or is a 5-wave structure, then you could end an impulse here with a wave 5. However, if we look at this move to the upside, you can see that it's not a very nice 5-wave impulsive structure. I guess we can all agree. Now, you know, the live chart is never perfect, right? You know, it's not as perfect as it is in the books. But what you can see though is that we have a sharp move up, we have a sideways range, and we get another move to the upside, which of course does look very 3-wavy, not 5-wavy, which therefore does give the probabilities to counting a wave A with internally the WXY, then a wave B with a zigzag in B, which is a common structure in a wave B, and then you have your wave C towards the downside, which then has to be a 5-wave impulsive structure. And just as a side note here, we do have the 4-hour gap low here, 101.2K as some potential extra support. But yeah, you know, like looking at this structure to the upside, very, very 3-wavy look, which automatically would increase the probabilities to still take out this high. Again, it is the 5-minute time frame, right? So take it with a grain of salt. The 4-hour time frame arguably is more interesting, more important, right? But at least we have covered the 5 minutes and I've shared my thoughts about it. If we then look at the news, then today, the 7th of January, we do have news. So here on Tuesday, 4 p.m. Central European time. So make sure you trade safe as it can increase the volatility on the chart. And if we then finally talk about the probabilities here on the 4-hour and the 5-minute, and currently on the 4-hour time frame, together with the polylines, of course, here, the probabilities would be higher to still look for a couple of 4-5s to finish an impulse, meaning the yellow line or this blue line over here. And the reason for this is that it is most common in any impulsive structure that the highest amount of volume is in your wave 3. So that is something that is preferred. But then, of course, closely following on the number 2 spot, we don't get multiple 4-5s, maybe one more high, but then we are looking for a retracement. So you can see that from an Elliott wave point of view, looking for a retracement is interesting. It's mainly the question, how many highs are you still going to get before you then get that retracement to the downside? I explained the resistances that I am personally looking for. To me, the most interesting by far is the weekly naked point of control here at the 105.2K. Definitely a level I'm interested in. Question is, will we reach that? Right? I mean, we'll wait and see in that regard. But we are, of course, looking for retracement, but the higher probabilities would be getting one of these lines, yellow or the bigger blue one, due to the volume in the recent push. And then on the 5-minute time frame, taking the high at least once more to either finish your C, which is this blue line here, or create a couple of 4-5s in yellow or the bigger blue line, right? Would be nicest seeing the structure on a 5-minute time frame as explained. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.